And we are live, and one more time, we're live. And good morning to everybody. Thank you for joining us today on the Friday edition of Behind the Markets. Welcome. It is Futuristic Friday. Today, as I told you, I'm going to be discussing budget proposals, things that I did submit of our own accord, and things that I think policies I am looking forward to in this next budgeting cycle, because the budget speech is coming up in this third quarter. Remember that this is the quarter where we do discuss the budget. So you want to really keep in lock on that one. But welcome to everybody. It's the 7th of the 7th month. It's 7/7. Good morning to you, Vernon. How are you doing?
Doing fantastic, thank you, Mtwale. How are you today?
Fine. What happened to doing handsome? Has your heart been broken, my brother? That we're running
Hi,
away
bro.
from.
Hi, bro. Because people, of course, will be now suspicious, saying, "What kind of a life is this guy living? He's always happy and handsome." So let's tone it down a bit a notch. But we are doing fantastic.
Why must you hide? This is. I remember a conversation between is it Trevor Noah and Burna Boy, and I've actually cited this one quite a lot of times. But it's a conversation between Trevor Noah and Burna Boy where they talk about Nigerians versus the rest of Africans, and that Africans tend to take a very humble approach to life. While
Mm.
Nigerians take a very braggadocious approach to life, and whenever a Nigerian is killing it. So here's an actual conversation. I'm actually going to play this one for everybody. Remember this one. This is actually on the Trevor Noah show. This is Nigerians versus Africans. So whenever you're greeting, this is how you must greet.
What's the word I'm looking for? Very timid approach to life. Like every other African has like a very, what's the word I'm looking for? Very timid approach to life. Like literally, like if you say to like a South African, "Hey Trevor, you're doing well. How are things going?" Then as a South African, my instinct to respond is like, "I'm trying, man. I'm doing okay. I'm trying."
But you're lying.
You see, this is what I mean by Nigerians. This is what I mean. No, but this is what I mean. So, and everywhere you go to Kenya, everything. How are things?
That's the thing. We
No,
don't lie unless we want to scam you.
This is Nigerians. I've never met a Nigerian who's gonna be like, "No, I'm not killing it." If they're killing it, they won't be like, "Yeah." So you think it's that? It's just like
That's
telling
not
the
something to
truth.
lie about. It's like if you're in court and you're about to go to jail, you should lie. You get me? But like,
But if you're killing it,
if you're killing it, like, you should.
So you see, so that's how we need to greet each other. But that's how we should be greeting each other, like the Nigerians do. Whenever you meet a Nigerian, it comes to my brother. I'm blessed from 10/10. That's how these guys greet you. No, that's Zambians. How you doing? Boss, we're trying. No, you're not trying. Train, my friend. You're not. Stop trying. Trying is like accepting defeat in life. So Vernon,
Yeah.
be handsome, brother. Be who you wanna be. Good morning to
As
everybody, and
always.
let's get kickstarted. Let's get kickstarted on the day before we get lost in a motivational speech. It is the 7th of July, 2023. Behind the Markets Futuristic Friday. Today on the market roundup, we have seen that the Kwacha has continued to slide downward at 17.8903, 0.91% down from the previous day, 3.1% down from the previous week, but still the dollar is still weak year to date. Now we are also seeing that the stock market did have a negative position yesterday, as we did see Airtel sales buying, but we did see some sells coming off on Zambeef and Zanaco, where I think it was a bit of take profit happening there. So 8,231, but we're still seeing stock markets up 12.18% year to date. We also did see that the bottom index was up 0.6%, but down in dollars 1.61%, reflecting the rundown of the kwacha ever since we started to see the sell-off after the IMF deal was announced. And we also saw interest rates come down just a tad bit yesterday, but we still got slightly elevated interest rates, relatively high. Now, when you look also against the rand, we did see that the rand dropped yesterday 0.64%. Year to date, the rand is down 11.83%, but most importantly, on the month, in the last 30 days, it's down 8.81%. 0.1%. So we're seeing this is the effect of people who are going to trade in South Africa and bring in products. What is going to happen to them? And we are expecting the downward pressure on a weaker rand should actually be reflecting in there. Now, in terms of dollars, we do see that the dollars was down 10.19% on the month, but only down 1.14% year to date. So we do have a stronger dollar with a rand that's kind of balancing between. Remember that we have a strong dollar around the world because we're still seeing interest rates rising. So one of the things we have to bear in mind is that interest rates in the Federal Reserve are still expected to rise because we had very strong jobs data coming out of America yesterday. We had strong ADP jobs numbers that came out yesterday, and also this is payroll week where we get payroll statistics coming out of America, which are a signal. And we're probably going to get very strong payroll results coming out at the end of this month. Now, we also did see that the GRZ bond index up 0.06%, up 13.74% year to date, up 1.8% on the month. But we do see that even in dollars, it's up 15.02%. It's losing steam. So you are seeing that convergence, and you're going to see that crossover. So you can see the GRZ bond index in kwacha heading upwards, GRZ bond index in dollars starting to head downwards with a few bumps upwards. And you can see there's a lot of volatility in the interest rates that are starting to bounce up and down. You're seeing that 24.19% of interest rates down 0.004% from yesterday. So it does mean there was a little bit of buying, a little bit of positivity yesterday. We did also see that copper was down 0.76% yesterday, with oil down 0.85%, gold down 0.66%. What caused all of this? Strong jobs numbers in America is on the expectations that we're going to see an interest rate hike. Okay, strong jobs numbers are signaling that we're probably going to see an interest rate hike coming soon, and also sticky inflation. So it's sticky inflation and strong jobs numbers, but the thing is, PPIs are still in the negative. So I think that's what's running these down. However, we did see that cryptocurrency is still up 0.3%. Some crypto news is coming out very soon. We also did see that Ethereum down 0.5%, and Bit and Gold in kwacha is up 0.24%. That's mainly because of the strength of the kwacha that overpowered the weakness of gold. So the strength of the dollar that overpowered the weakness of gold. So what are we seeing here? Bitcoin back up 80% year to date, but remember, it's had a bad second quarter. It had losses in second quarter. Ethereum up 52% year to date, while we're also seeing bonds up 13.7%, stocks up 12.2%, and we're also seeing that gold is up 3.8%, with the dollar just about breaking even throughout the year. Now, in terms of our four horsemen from yesterday, we did see that job cuts numbers in America did drop to 25%, but when we did see that ADP non-farm employment changes increased by 492. In other words, America created 497,000 new jobs last month. So that also shows that the American jobs market is actually picking up quite strong. However, job openings in America have dropped below 10 million for the first time in a while. Spanish bonds auctioned higher, US bonds auctioned higher, and US crude inventories were up 1.5 million. But unfortunately, it's interest rates which are fearful from a good jobs data in America. We also saw that German factory orders were up 6.4% yesterday, while Italian and German construction was down. So we're getting mixed signals from industrial data. We're getting a strong jobs market in America, but we still are getting weak job openings. Interest rates are still being pushed upwards. We gave you that S&P mid-year read yesterday, with crude inventories pushing up potential inflation, but we're still looking at global food prices. That data is coming out very soon. We'll be looking at the FAO global food prices to see what imported inflation risks we shall be facing. On the other side of the break, Bernard will be breaking through a few deep dives today from the global market and getting into my deep conversation today about what we should be expecting from the budget, or desiring what we should be pushing for from this year's budget. There's many other things that we want to talk about, but on the other side, those are going to be the main things that we will break down into. And if we have a little bit of time, I'm going to take you through 6 strategies on how to deal with discipline. That is on the other side of the break. And welcome back to everybody. Thank you very much for joining us. We are back. I have put out our pulse question for the day, Vernon. And our pulse question is, what policies would you like to see in budget 2024? And how do you feel they would make your life better? We're not talking about an academic, theoretical thing here. I'm asking, as a citizens of this country, what are the things you'd like to hear the Minister of Finance put into budget 2024, and how do you feel it would make your life better as a citizen? That is something that obviously you'd have to also remember, and remember that you are contributing to a nation. So that is one of that is the pulse question for today. We'd like to hear some of your answers here, and we'll share it towards the end as I'll be talking about some of the budget proposals that I had submitted, but I'll be also be opening up some of the things you would like to hear as well. Let's get back into the conversation mainly today, Vernon. Let's touch into some of our deep dives. Big story yesterday was small U.S. home builders tapped the brakes on construction because of the credit squeeze, and rate rises are hurting. So this is actually quite important news, because people who are the small constructors of homes, they are actually having an issue in terms of being able to come up with to access capital to build homes. So the March collapse of Silicon Valley Bank is likely to slow down the flow of credit to small businesses and households and hurt the affordability of buyers. The national home builders expect the total housing starts to decline to about 1.4 million or less in 2023, compared to 1.55 million in 2022 and 1.6 million. In other words, 100,000 less home construction projects are expected in America. That is expected to hit us all around the world, because remember, American construction projects also call into demand for things like copper. They call into demand for things like building materials and minerals. Public builders share of housing starts rose to 40% in the first quarter, up from 37% last year and 36% in the prior quarter. So that's data that you're seeing, that these small construction companies, these little private small construction companies, are struggling to access capital, or struggling to actually get any business because of lack of capital for building. Other news that we saw yesterday is also the pedal to the metal. Kenya raises fuel prices. Here's a little chart to actually see that Kenya has now seen the highest fuel increment since 2020, since 2010, mainly because of the fact that they had to remove these things, and also subsidies were just unsustainable. So the full high price of oil has started to reflect in Kenya, with the weakness of the currency, has now reflected into the highest per shilling gasoline prices. We're seeing gasoline prices now hitting 200 shillings because Ruto had to remove those subsidies, just like you're seeing in Nigeria, where they had to remove subsidies, and you saw fuel going all the way from 189 naira to 500 naira. So this is actually what is now we're actually seeing in society. So it appears that, and this is what I kept on saying, subsidies are unsustainable for African countries right now. Even Angola is having to do away with subsidies. So the two biggest oil producers in this country, Angola is slowly stripping away its subsidies. Nigeria got rid of its subsidies. Kenya got rid of its subsidies. So all of our debates about subsidies have now been unbundled just a year later, because you can see that the countries that had to deal with these subsidies were really dealing with horrible budget deficits that were nailing them in their ability to now deliver public service and to contain FX. So subsidies had to get away with, and this is the result that we're seeing now in Kenya, just as we've seen it in Nigeria, just as we're starting to see in Angola. These three areas where we're seeing oil prices going up. And so we've experienced elevated fuel prices because we just got to that party a little bit earlier than everyone else. We came to the realization as a country. Other news that we are seeing in terms of oil and the oil market has to do with Africans and Russian oil. This came out of S&P, where we found that Africans, Russian oil products have flooded into Africa since the invasion. If you take a look at the invasion, which kicked off in the early parts of 2022, but if you look towards the end, Africans are actually consuming a lot more Russian oil products. And you can see it peaked somewhere in March and April 2023, but now it started to slowly come down. maybe it's the prices or anything, but you can see that we really started to consume quite a bit of Russian oil because Africans were saying, you know what, this oil stuff is a bit too expensive for us. So if we have to risk it all and touch into Russia, this is an example of what the energy markets are starting to do. And this is geopolitical tension that could actually start to spill over into other things. Now, we have to be very careful as a country of trying to touch into this area. We're still trying to negotiate with American creditors at the moment. It may not be a good idea to start touching Russian oil while we are trying to deal with $6 billion worth of debt. Just putting that out there. Now, on the other side of things, we did see that Goldman Sachs says that the rising EV usage is set to power higher demand for copper. Now, they have forecasted that copper demand for the sector, just from electric vehicles alone, amounted to 1 million tons this year, and it's expected to rise to 1.5 million tons. Last year, EV production accounted for 2/3 of the increase in global copper demand, with EVs likely to account for 27% of copper consumption over the next decade. So this is how important electric vehicles have become, and this is why copper has stayed above 8,000 rather than collapsing while we're seeing the American housing sector is slowing down. We're seeing the Chinese housing sector is slowing down and infrastructure spending is slowing down. While we're seeing a global slowdown, why are we still seeing an $8,000 copper price? It is because electric vehicles are still growing about 60% year on year and are basically going to account. Now, over the long term, Goldman Sachs does predict that copper usage in EVs could fall in the long term, with the amount of copper per car dropping from 65 kgs per unit, dropping to 65 kg per unit by 2030 from 73 kgs per unit in 2022. This is what the bank said. Now, remember that we're getting to a point where by the end of 2030, we're looking at about 40 to 50 million, somewhere around 30 to 40 million, electric vehicles getting onto the market annually. So that already shows you that if you've got 70 kgs going into a car, if you have 65 kgs going into 30 million cars, that's a lot of refined copper that we're expecting onto the market. Now you can see why I think the EV story is actually adding into a huge amount of the mainstream narrative when it comes to all of this. So those are millions of tons of copper actually pushing this, and this is why EVs are going to be a big part of it. We also saw yesterday in crypto news that Namibia passed a bill to regulate crypto and digital assets. The bill, passed by the Namibian Lower House of Parliament in June, aims to regulate digital assets and cryptocurrencies and virtual asset providers, VASPs, in the country, as they've actually shown. The legislation aims to establish a framework to license and regulate virtual asset providers, and it also seeks to appoint a regulatory authority responsible for supervising the provision of these activities. So they're actually going to be now looking at regulating and actually licensing cryptocurrency service providers in Namibia. So they've accepted that this is now a part of the future. And now they're just going to figure out, okay, how do we now mesh this in before our people start operating off the books, similar to how Nigeria has actually failed to actually understand that virtual assets are unfortunately just a part of the mix. So that's I think we got ahead of ourselves there. That's story number one in the crypto market. Number two in the crypto market is United Arab Emirates now accounts for 3.7% of global Bitcoin mining activity, with heavily subsidized electricity tariffs for the sector. And the country has also had widespread home-based crypto mining attention for the average person who has bought a low-scale mining rig. And also they've seen that the advent of mining as a service companies, in other words, cloud-based mining or mining pool companies, have come into the United Arab Emirates. The expansion of its electricity supplies, partnerships with players, and favorable access to capital, the UAE is paving the way to become a crypto mining haven. Now, I've said this before in Zambia, that one of the main things that we should be looking at is this kind of way to try and sell out electricity to bring in dollars into the country. Why do I say this? uh, Bitcoin mining versus electricity uses actually becomes a way to almost even finance renewable energy. A lot of these guys who are actually in the crypto mining space and pool mines are actually very comfortable even building solar power farms or solar farms to actually help support their mining operations, because they've actually found that solar farms are very effective in actually allowing these crypto miners to be able to get to be able to do their activity. Now, one of the problems that you're facing in countries like China has chased out crypto miners. They don't even want to see those people anymore. So it's created a very big vacuum. Now they're looking. Now a lot of the crypto space is also having a conversation about green mining. Now, obviously, United Arab Emirates use petrochemicals for electricity supply. They are trying to switch. They use fossil fuels mainly for electricity supply. They are trying to switch going forward. They are trying to invest a lot in renewables. But here in Zambia, we have water. That is our main source of electricity. So to utilize it for that thing also creates an opportunity for people here to start making money online. And if we can start pools of African pools here in countries like Zambia, that actually affects that kind of change. So that's actually very important going forward, and something we should be looking at. But the United Arab Emirates has gotten ahead of us. And this is why I said that in Zambia, the policy should not be trading Bitcoin. It should actually be supporting the mining of it. Now, the only problem is that the hashing power required and the mining rigs required are relatively expensive. So it is the access to capital that's going to be the prohibitive part for people to actually be able to start mining Bitcoin in Zambia. So that is where the problems are starting to lie, being able to do that. But these are things that we can do as citizens, economic empowerment funds, all sorts of things to actually be able to help build these things out. These are conversations that we can start to look at. But this is news that we're seeing in the United Arab Emirates, that hashing power is starting to move out of China and into the rest of the world. And that is all of our main deep dives for today. Not much in the markets happening today, and we are breaking directly into our topic of discussion. Now, our topic of discussion today, where being it Futuristic Friday, I am going to be having a conversation with all of you about certain budget proposals that I did put down. Remember, they did open up to us in the professional world to start putting in budget proposals. So this was something that we did submit very recently as to what we think should be in the 2024 budget. But we have posed a question to all of you here. What policies, and I ask this again, what policies would you like to see in budget 2024? Please hit us in the comments section. Share this with as many people as you like. Tag people. Let's have a conversation here about what policies you think you'd like to see, and also how do you feel that they will improve your life. One of the reasons why I keep asking that question is because I want you to get away from the theoretical debate and start asking for things that will actually benefit for you, that will actually benefit your life, that will actually improve your life. So it's a good conversation to start having. What policies would you like to see in budget 2024? I'd like to hear some of your answers, and I'll share them towards the end. But let's get down to what we were looking at in terms of our discussion, our topic of discussion of budget 2024. Now, my proposed outlook in terms of budget 2024 is the proposed theme I'm looking at is transformative wealth creation for the Zambian people. The reason I say this is that getting through the budget, getting through the debt negotiation, unlocks a circumstance that we're on the other side of 2025. Zambia is looking at potentially one of the biggest runs of wealth creation that this nation's ever seen in its history. And I've given you the reasons for that before. I've said that we're going to see a situation where we're going to have less dollar outflow. We're going to have a lot of macroeconomic stability in this country. In other words, the FX rate, probably at least after we've dealt with the creditors here, and we've seen that interest rates start getting pulled down next year. So 2024, expect interest rates to start getting pulled down in the major G7 economies, and there'll be no more. I think the inflation fight will finally come to its end. Once you start seeing that happening and you start seeing the pull down of that, you'll start seeing a lot more growth in the credit sector. And once that starts to happen, I think we'll start to see macroeconomic stability coming into Zambia a lot stronger, because then our FX outflows will be much more controlled. Two, we'll start seeing inflation getting much more under control than where it is. We're already still at single-digit inflation, thank goodness. But I think going forward, we should see it now holding into a much stronger line. And then three, growth is expected to come out, especially export-fueled growth. And one of the reasons why growth, the catalyst for growth, is there, is similar to 2003 to 2020 to 2013. Where 2004, sorry, to 2013, when we were the recipients of the Chinese construction boom, where China basically urbanized at one of the most rapid rates. China moved from it's being majority rural to being majority urban just in that period of time. And they had built China from 1990 to 2015 had built 300 cities. That's not a joke, people. 300 of its 600 cities were built in just that space of time. That huge construction activity, that huge urbanization driven by manufacturing and peasant workers moving from the hillsides and the countrysides into main urban China, that actually created a huge call for minerals and boomed up the economy. So Zambia's economic stability plus the call for mineral resources that were supposed to contribute to building of infrastructure and houses, that led to a huge cycle of growth that pushed up Zambia's economy to the fastest ever decade of economic growth that Zambia has ever seen, even faster than the post-independence decade, which is touted as one of the strongest decades of economic growth. This was the fastest. In fact, it was the fastest we've ever seen export growth as well. Export was growing at 29% a year during that period. We're expecting to see a much stronger one because we're not even going to be dealing with elevated oil prices like President Manawasa and his team were during that time. We're going to be dealing with much more subdued oil prices around 2028 because the electric vehicle rise, which is what's giving the stronger demand to oil, is also going to result in the decline of oil demand. So the copper prices going up is also is going to be, you're going to see copper and oil stop moving together, because for a long period of time we've seen copper and oil moving together. We're now going to see this divergence where copper is going to start going up, oil is going to start shaving downwards, because they're going to be moving in opposite fashions, because now we're going to be switching the transportation method. So they're going to be competitors rather than they used to be complementary. Copper and oil used to move together complementary. Now they're going to be competitive commodities in the mainstream conversation. So in a time of growth and stability, that is a time we need to look at wealth creating policies. So the question we need to ask ourselves is, why the last time did we fail to create wealth in this country when there was this much economic growth? The Zambian economy grew sevenfold. We saw so much activity. Why did this fail to result in economic growth? Well, the reason it failed to result in economic growth is because Zambians were not participating in wealth creation. Zambians were job seeking, but we were not participating in wealth creation. We were not running businesses. We were not investing in the stock market. We don't own the shares in the stock market. So as a result, because we were not participating in the stock market, when the stock market blew up the way it did, we did not benefit from it. When the asset markets also blew up the way they did, we didn't benefit from it. When business boomed the way it did and profits of companies were rising astronomically, we did not benefit from it. The average stock market company, the average listed company, was experiencing a 20 to 30% increase in income, in annual profits. That was what was going on in the markets. So if you look very carefully, I think what we did lose out on was we were not participating. So how do we make sure that wealth creation happens this time? As the economy expands, we need to make sure that the majority of Zambian people, not just the government taxing things, Zambian people are being driven to participate in owning equities, in owning bonds, in owning businesses and operating. It is the ownership and operation of things where wealth is created. So the policies that we need to start looking at on the other side of this is, how do we start to stimulate activity and also get much more people through? How do we start to stimulate skills development, business ownership, and asset deployment? The three things where wealth is created: your skills, your assets, and your businesses. These things, Your businesses are your ideas. It's your skills, your assets, and your ideas. That's why we're talking about transformative wealth creation for the Zambian people. Because this time, last time we saw, last time, just to remember this, there was a quote that was actually stated by President Manawaso, who said, for all the economic growth, he said his number one regret is that for all the economic growth that he brought, poverty still sustained. And this was the problem. China, so I want us just to go back into a parallel here. If you go back to the year 2000, China had 88% of its population in poverty. Zambia had 84% of its population in poverty. So from 2001 to 2020 to about 2020 to 2014, 2015, the Chinese economy grows sevenfold. The Zambian economy also grows sevenfold. So think about this. The Chinese economy grew sevenfold. The Zambian economy also grew sevenfold. Both economies grew 7 times what they were. Okay. But what happened? What went wrong? Why did China, and if you look at poverty levels, this is where the divergence happens. Zambia's poverty level was at 84%. It actually even increased to 88%. So how growth resulted in more poverty is beyond me. I think Buchizi and I had this conversation a long time ago, not Buchizi, where he said the poverty, unfortunately, we ended up increasing the number of people. Now, what you saw in China was poverty declined from 88% to 33%, 36%. So how did China go from 88% poverty to 36% poverty, but Zambia's poverty stayed up? Difference. Chinese operate 95% of listed companies. They own and operate 95% of listed companies. 95% of the wealth of the Chinese stock market is owned by Chinese people. Now, if you look at the Zambian stock market, over 80% of it is not owned by Zambians. That's where the problem comes. Okay, so when the wealth of the stock market rises, the Zambians are not the ones holding that wealth. It's multinational companies and not Zambians. Okay, we're not participating our wealth in there. When assets are being deployed, in other words, when bond coupons are being paid out, majority of those bond coupons were going to foreign investors before. Were they coming to us? No. So now we're starting to see more Zambians actively participating in those areas. Okay, when businesses start to go through strong profit cycles because of a stable FX, a stable exchange rate, and a growing environment. So when you have stable FX, stable inflation, and a growing environment, business profits rise. So when those business profits were rising, was that going to the Zambians? No. So the ways to capture wealth are through asset ownership and business ownership. These things, it's asset ownership that triggers wealth creation. And when you create more wealthy people, you reduce the impoverished people. So that's what China understood. So they created sinks that could capture the economic growth and turn it into wealth. Zambia has not created the equivalent sinks. Okay, we don't have SME, we don't have business ownership as much as we should. We've seen it grow, and we're hoping that we can do that. We have a lot of employees who earn salaries, but they have zero savings. They have no assets. Okay, the only asset they'll own is a flat at the end of the day, but they don't have any active cash flow generating assets. So no business owners, no asset owners, job seekers only, zero wealth creation. Okay. So no matter how much the Zambian economy grows, if we don't own businesses and we don't own financial assets, we will not participate in wealth creation. And therefore, we will see this economy move from $20 billion to $100 billion, and still we will still witness no transformation of the Zambian people. So this is why I said we have to make sure that from a policy and from a personal level, we are all moving towards creating wealth. Okay, it's a God-given power. Deuteronomy says, for it is God that gives you the ability to create wealth. So let's talk about some of the proposed policies that we'll look at in terms of transformative wealth creation for the Zambian people. So remember, these are the things I'm trying to hitch here. This is what I think should be in budget 2024. This is the national budget proposal. This is my side of things that I'm looking at. I really would like to see a lot more, a lot of your views. Please answer the question as well. And thank you very much for everyone who's joining us. John, Joseph, Doreen, share this with as many of your friends as possible. Let's have a joint conversation about this. Now, there are 6 areas where I have looked at where the budget proposals could be. These are the 6 areas I've looked at: SME stimulus policy, savings and investment tax incentives, higher education savings and tax incentives, alternative household energy tax incentives, 5-way mining tax allocation, domestic gold savers market, and a CDF allocation policy. A CDF allocation policy. So these are some of the things that we would be looking at here in terms of budget proposals. Now, let's take a look at what are some of the areas I'm looking at here. So the first policy I'd submitted for was 2019. The UPND proposed a 2019 proposed graduated fee structure. So this is from the UPND did put out a policy back in 2019 when there were candidates that they were saying that all council fees, licensing fees, and statutory fees should be liable to businesses on a graduated scale from the time that business starts. So in your first year of business, if you know what, no matter what fees, whether it's a council fee, whether it's a business levy, whatever fee it is, your first year you should be totally exempt. The second year, you should only have to pay 25% of whatever fee that is. So in other words, in the second year, you should only have to pay, if the fee is 1,000 kwacha operating fee, whatever it is, you should only have to pay 250 kwacha for it. So you should only be liable 25% in your second year of operating. In your third year of operating, only 50%, 75%, 100%. So whatever industry, whether it's a council, whether it's a regulatory authority, whoever it is, you should be paying your fees in a graduated scale. This allows the entrepreneurs to get through their trying. In order for us to capture more wealth, we need more businesses to get past those first 5 years. Now, there are already a lot of trials and tribulations in the first 5 years, trying to find a market opportunity, trying to build the right solution, trying to build a team. These are very difficult activities to synchronize. A team, a market opportunity, and a product and an idea, all 3 of these things coming together, okay? These are very difficult things to actually try to get for people. And while on top of that, dealing with statutory regulators who keep growing in numbers and scale. Every day there's a new regulatory agency with more fees and more fees and more fees that are charging people. So what we need to try and do, and also the councils wake up in the morning and decide they just want to charge people as well. So the first thing I think we need to ask is all people should be put on a standstill. Because the number one issue in Zambia is what we call underemployment. The number one problem Zambia is facing is underemployment. In fact, the World Economic Forum even cited the number one risk of doing business in Zambia is the level of underemployment. It creates political risks, it creates crime risks, it creates all sorts of instability, and those political risks then manifest into economic risks. It is the poverty levels and the unemployment levels of this country that are causing the biggest danger. The fact that people do not have work is where the biggest danger is coming from. So we must make sure that the ability for people to start businesses and grow their businesses in a comfortable environment where they have the freedom to try and make mistakes should be given. And the best way to do that is to remove the financial sanctions. So no one, whether you're a regulatory authority, whether you're a council, whatever licensing fee you charge anyone for operating a business or starting a business should be issued on a graduated scale. So whatever fee you have put in, a person should only have to pay 0% in the first year, 25% of that fee in the second year, 50% in the next year, and then 75% in the fourth year, and in the fifth year, after 5 years of operating, that's when they should be liable to pay the full amount of whatever fee. Because by then, they've either been killed off by their poor idea or they've grown enough that they're able to grow their business. So that is the first point that we've actually seen. Now, I will cite a few things here. Where has the government actually done well in terms of SME policy? They've actually created an SME ministry. They've created CDFs. They've created CDF contracts. They put 400 million worth of CEC loans into circulation, and the government is also supporting the currently financial support going to SMEs is going well in every other way. But unfortunately, what the SMEs need is a less costly environment. Okay, businesses need a less costly environment to operate in. So wherever we can try and streamline government imposed costs, perhaps maybe let's push for that. Maybe that will actually help. So this is why I was saying let's also focus on creating a more profitable environment. This is what we did for mines. Okay, the mining companies got tax restructuring because that gives them a more profitable environment and a bigger return on investment to operate with. The SMEs, who are the biggest employer in this country, should be afforded the same. So what should we expect from this kind of a policy? What should we expect from the implementation of this kind of a policy? Well, this free trial will serve as a lowering of entry barriers. One of the biggest problems people have in entering any industry is usually the guard dogs are your regulators and agencies, and they're the ones who've been blocking quite a number of people, including your agents, even your council authorities. They've actually been doing a lot of blocking of people, and they've been killing off quite a lot of businesses. So this graduated fee structure will incentivize businesses to also take as much advantage of the period where they are not paying fees to reinvest in their businesses, because there will come a time where they'll have to pay those full fees, and they need to be bigger to do that. So it also acts as an incentive. Now, in the short run, agencies will have lower revenues. Okay, agencies and authorities will experience declining revenues in the short run. Now, another policy that we need to consider as well when it comes to SMEs is also to restrict the combined cost of all annual regulatory license fees, or whether it's council, regulators, statutory fees, any fixed costs that somebody has to pay. So any once-off charge that somebody has to pay should be subjected to a means test. Okay, and that should be that the combination of all regulatory annual fees that you should be paying should not exceed 4.7% of the median annual turnover. So we find the median, the 50th percentile business in Zambia, what is the turnover of that business, and the combination of all regulatory expenses should not exceed 5.7%, because somebody cannot be paying taxes and also be paying regulatory and also be paying salaries. Where on earth is this person going to make a profit? Okay, because they need those profits to invest, because there's no banks giving them money, and there's no the cost of doing business keeps going up. So these people need growing profits to be able to refuel and grow their companies. So in order to do that, cap the regulators. Listen, the country is not designed on rich regulators and rich authorities and rich councils. It is built on growing businesses. Okay, so you need SMEs to be stimulated in such a way that whatever fees they're going to be paying should not exceed 5.7% of the median size business. So every year a survey should be done to find what the annual turnover of the average business is. We've got this data, we've got tax data to support all of this, so you can just get it from there and then start to find out. So yes, it should be the registered businesses. So the number the median turnover data should be from registered businesses. So in the short run, yes, we will still see that regulatory agencies will have lower fees. This will start to make starting a business more affordable. It will also restrict regulators to now look at creating money from activity. Instead of charging these upfront barrier restrictive fees, they can actually now start looking at saying, okay, fine, we need percentages of certain amounts, and even that can be controlled. And it will also encourage councils to generate their money from service delivery, not just fees like it's an entitlement for people, because there are too many fees in Zambia. That's where the problem also comes in terms of our structure. There are too many fees. Everybody wants to charge a fee. Nobody wants to deliver a service. Okay, so that's one of the second things that we've got here. Please, like I said, if any of these are touching on you, please write in the comment section, share it with a friend. Let's hear your thoughts on it. The third one which you had submitted was, and this is the most important one, an upward and inflation adjustment to turnover tax threshold from 800,000 to 2.6 million. Okay, the inflation and then have an inflation indexation of turnover tax going forward every single year. In other words, the threshold must be adjusted upwards every single year for inflation. So if the cost of doing business goes up, if the inflation rate goes up by 10%, the turnover tax threshold also goes up by 10%. Now, let me explain where the rationale of this policy prescription comes from. So at the end of the day, and the reason I've said this is that yes, we have created, we have slowed down money creation and inflation for a lot of people, and we've slowed down the cost of doing the rise in the cost of doing business. CDF empowerment has gone up, CDF loans have gone up, Ministry of SMEs, government is also borrowing less from the market, so people can actually access a bit more credit. But unfortunately, since 2013, the last time the turnover tax threshold was adjusted, we've seen a reduction in the real size of a business. Okay, that's actually hitting that turnover tax threshold. So let me give you a quick explanation. So let's say you've got a person who's a vendor of chickens. Let's assume somebody sells chickens. Okay. Now in 2013, to reach that 800,000 sales turnover, they had to sell about 854 chickens per week to pass that turnover tax threshold. Now a person who's selling 850 kgs of chicken per week probably has an employee. They've probably got someone who's handling books. You could see that this actually made sense for them. Okay, so tax compliance management becomes easier. I'm looking at the time and human capital cost, whether it's affordable for somebody to do this. Now, in order to manage the more complicated tax thresholds. Now, if you look at a person who's vending chickens today at 60 kwacha per chicken, remember back then chickens were 18, now they're 60 kwacha per kg, that person only sells 256 kgs of chicken. Now, that's a third of that's less than a third of the business activity that somebody was doing in 2013. Now, imagine somebody, a business one third of the size, now trying to keep up with complex tax management. Okay, this is probably a person running a single store, and they're not able to keep up with this. And simultaneously, your banks were given a 2.8 billion kwacha tax, basically a tax fee, a tax stimulus last year. Not banks, sorry, your mining companies were given that. So there's a lot of envy building up. So this is why the suggestion is to upward adjust the turnover tax threshold from 800,000 to 2.6 million, giving the small businesses that movement as well, and to index it, meaning that turnover tax threshold should from now onwards start to move up with inflation because it disadvantages small businesses. Now, the outcomes of this policy should be an incentive for small boutique businesses who have been afraid of going past that turnover tax threshold because they don't want to deal with the mainstream taxes to now actually grow. So if you get an overnight growth of the small boutique businesses to start pushing beyond that 800,000 turnover tax threshold, they'll hire more people. Now remember that increased SME hiring means that that's also good for women employment and youth employment, because not only are SMEs the number one employer in the country, SMEs are the most likely to hire women, children, and unskilled labor. Okay, because they do not have the cash and the capital to get technology and high-skilled labor, they tend to hire people straight out of university. They hire people who are still studying in university. So this is a very important thing to remember when it comes to what policies to look at. Also, you'll see a rise in business-to-business transactions amongst SMEs. And in the long run, it'll generate more tax revenue because these businesses will start to grow. And it'll also serve as a financial incentive for the government to keep inflation low. Because if inflation goes too high, then the government may start to lose out because the SME taxes, well, a lot more companies will stay in the turnover tax threshold and not graduate out of the turnover tax threshold. So it creates an incentive for the government to do that. Now, alongside all of this, we'll also put a proposal also for taxes to do the same graduated scale we were talking about earlier. So if you remember, I talked about a graduated scale of fees. we should also be looking at a graduated scale for taxes. Along with that, we put that the alongside the UPND's 2019 policy, they also said taxes also should be subjected to a graduated scale where a person is tax-free in their first year, they're 75% tax discounted, 50% tax discounted in the third year, 25% tax discounted in the fourth year, and only in the fifth year should they be paying the full amount. So that also should add to a policy. And finally, so another SME stimulus policy. So the more we get these small businesses to grow, we get this broad-based business participation. What we're trying to say is the more you incentivize people to start businesses, the more you actually grow the economy and create wealth. So your SME stimulus policies are very important. So a 10% discount on taxes payable for big businesses who have an annual turnover of 100 million kwacha or more, who grant at least 35% of their supply contracts, their B2B business service contracts, to youth and women-owned SMEs. It's very important. Because if you can get youth and women-owned SMEs into business, you're going to capture a lot of people into this space. Remember that 95. Remember, I showed you a chart yesterday that still about 40% of your business ownership is sitting in the hands of men above the age of 35. That doesn't mean we have to disqualify them, but you also need to get a lot more young people running businesses because there's high levels of youth unemployment. High levels. So they really need to start businesses. And the more young people who start businesses, young people are very likely to hire other young people. Women-owned businesses, women are very likely to hire women as well. Okay, so that's something you want to pay attention to. 10% discount also on taxes payable for big banks and lending institutions, who have 100 million in lending portfolio, who grant 25% of their loans to youth and women-owned businesses. Currently, youth and women only make up 3 to 4% of total loan. Sorry, not 3 to 4, but 6% of total loan portfolio. 3 to 4% is women, 2 to 3% is youth. For 6 to 7% of the total loans portfolio distributed, new loans distributed every single year. Every single month. Only 7% goes to small businesses and which are owned by youth and women. So if we can get more of that getting to youth and women by stimulating and giving a tax incentive to big companies in order to do that, that's a good one for SME creation. And finally, cap all regulatory licenses to 30 days. No one should take more than 30 days to process a regulatory license in this country. What you also find is a lot of the regulators and the councils and the authorities take very long to release licenses. Unless there is cause, there is no reason some of these things should be taking longer than 30 days. 30 days should be the maximum for all. A person should be able to register and obtain their licenses within 30 days to be able to get started, because we need people to start businesses so that they can be employment, so that the country can start making money and we can have domestic employment. It should not always be investors who bring employment. Zambians need to give each other employment. Okay? Sustainable employment, NAPSA paying employment, pension paying employment. We need Zambians to give each other quality employment. And in order to do that, we need to stimulate our businesses for growth. So in order to do this, this is what we will be looking at. Let's look at savings and investment incentives. Next one I'm looking at is exempt. And somebody has actually put this saying it would be progressive if local bondholders could not be charged taxes on their coupons. Guess what? That is the next one I've put here. Savings and investment incentives should be that exempt. We should exempt GRZ coupons and T-bill discounts from 15% withholding tax only for retail investors and also savings groups. Savings groups also represent retail investors who jointly invest in GRZ bonds and treasury bills. So one of the things we've done, now we've seen that life insurance is withholding tax exempt because they're trying to get people in there. Deposits at banks are withholding tax exempt already. Stocks, dividends from the stock market for retail investors are also withholding tax exempt. Now, the Zambian retail investors should also be given an exemption on their treasury bills. And also, we've seen that that people who earn rental income of less than 800,000 per year are also put down to turnover tax. So we should actually be looking at another two biggest asset classes that people hold on to in their retirement are properties and bonds. So yes, we should be looking at exempting them. Worst case scenario, we should be looking at putting them at turnover tax. So as an individual, maybe if they could reduce it, if they still have to tax, okay, then let it be at the 4% turnover tax, the same way we're taxing the same way we're taxing people who for rental income. Okay, so coupon income should be brought down to the 4% tax rather than down to the rather than holding that level of tax that we have, because people are paying 16%, 15% withholding tax, 1% BOZ handling fee, and the people who are doing it through their bank are actually paying 17%, because the banks also have a tendency to add an extra 1%, and sometimes banks even take 1% on your what's it on the face value of your bond. So if we can bring these down to zero, preferably, but if we have to, the 4%, the turnover tax threshold, the turnover tax number for any person who's got coupon income less than 800,000 kwacha per year, that should also support a lot more people owning government bonds. Obviously, the main institutional buyers are the ones who obviously pay a lot, but the average person is not going to have an 8 million kwacha plus portfolio. Some people will, but the average person is just not going to have an 8 million kwacha bond portfolio. So the other incentive, which I think is actually quite important, is to try and help the higher education space. A lot of parents are not incentivized to do this. Now in America, they have something called a 529 tax advantage plan, which actually incentivizes parents to save. And what that does is that if you're saving specifically for the use of college or the use of university for your child, what that can do is that they can remove it from your taxable income. So here's what I propose: allow monthly payments to a government approved tertiary education savings plan for children and dependents below the age of 19, provided by a licensed insurance corporation or licensed investment advisor, to be deductible from gross income. And the maximum amount deductible should be the lower of 6,250 kwacha, or 17.5% of one's gross income in total. Okay, now this is very important because we'd like to get as many parents who can save for their children's education to do so, and to avoid children having to go and get student debt, and to really leave the bursaries and loans, or specifically the bursaries, for really the people who are orphaned maybe from the time they were very little. Okay, those are the ones we really want to try and support here. So if we can try and get people to have tax deductible. Now what this simply means is, let's say you're earning 10,000 kwacha. And that means that you have an allowance for 1,750 kwacha that you can be saving for your children's education if you have children. And it must be going into a child education policy, or it should be going into a savings plan that's structured by an investment advisor. If you withdraw that money and use it for anything else rather than education, you are taxed at highest bracket. That's what we should be doing. Now, this should encourage people to save for those things at the main point. Okay, so this should encourage people to save for their children's education going forward. What that does is, the more people who save for education, the less children are going to go into debt. The less people are going to start their lives with student debt, because right now people are starting with student debt. You are seeing this problem in America. You are seeing it in the UK. You are seeing the student debt crisis play out around the world, and even in Zambia, it's starting to build. The student debt is becoming a crisis here. Okay, so I think what we need to start looking at is how to reduce that burden by encouraging people to rather save than to borrow for degrees. Okay, so this is a way to try and help going forward. Now, also, the other part you also may want to pay attention to is the amount of money the amount of growth of tertiary education that's coming from private universities. The majority of the growth of the tertiary population in this country, and I say this because we've just studied the numbers. Over 90% of the growth of the tertiary population of this country is a result of private colleges, which are not covered by student loans. So you also want the flexibility for your child to be able to go to a private university in Zambia. And we want to try and encourage those who can save to start saving now. okay, as early as possible. So that's why we've put these numbers there. We studied the numbers, studied the situations. What are the actual savings rates that people should be putting aside? And this is where we're saying 17.5% capped. The numbers are negotiable, but we need to start encouraging parents to start saving for their children's education. Finally, one of the other incentives that we are looking at here is an alternative household energy incentive, 50% discount. Now, this sounds tricky. Okay, this sounds pretty funny because we've attached it to the marital process. But what we found is the fastest way electric stoves enter households is actually through weddings. It's people getting married. So we need to try and the intervention needs to be right there at that point. So you need to try and offer people some sort of a rebate. So what I'd be proposing is about a 50% VAT discount on wedding registries, the full wedding registry. So if a couple bought all sorts of things, stove, fridge, everything, all these things are put together, there's VAT that's attached to all of these things, and they should be able to get a rebate of 50% of that total VAT if instead of an electric stove, there's a gas stove in there. And if they have been purchased things that include gas. And I know that's a tricky one, but you have to incentivize it at that juncture because women are making that decision to bring electric stoves into houses. Okay, now there are 50,000 new houses being attached to the grid every single year. The majority of grid stress, over 50 to 60% of the growth of grid demand over the last decade has been a result of household growth. So you need to look at the biggest things in household: geysers and stoves. They make up about 50% of electricity demand inside a household. So if you can try and knock out those stoves and the growth of stoves, so this is why we're looking at this. This is very important. If you can slow down grid stress in this country and free up the grid, that grid has been the biggest constraint of economic growth. So for Zambia to grow past 5% continuously, we need a strong grid. The last load shedding cycle we faced in quarter 1, do you all know that it was preceded by 2 quarters of above 5% economic growth? Whenever Zambia experiences above 2 to 3 quarters of above 5% economic growth, load shedding is coming very soon. It happens every single time. Every time the economy grows past 5%, load shedding comes. So we need to be able to reduce grid stress. These are practical applications of things we can do to do that. We're also looking at 0% customs and import duties on gas geysers, so people can start using gas for water heating instead of electricity. If you can knock out the geyser and the stove from a household, that improves a lot. That actually reduces a lot of the grid demand from households, especially the tons of households that are using electricity. Also, if you can look at incentivizing current landlords to switch from electric to that, if you can offer them some sort of a tax rebate on their turnover tax, whatever it is, for at least 3 to 4 years to encourage the switch. What you understand is where the government is going to lose revenue in these areas, they actually also make savings in building power stations. Okay, because to build the power stations to match the domestic demand, if the government's new power stations can be aimed at export and industry rather than trying to hit domestic demand, that'll be a huge savings for the country. So it'll actually create a lot more growth and open up a lot more. So this is a tactical loss that can happen in terms of revenue to support a better grid. So these are some actual applications. Now, another thing that we can do to also surpass this is a spending measure. Is in Botswana and South Africa, what they did in the 90s is instead of building power stations, they just bought gas stoves and cylinders and gave it to people. They said, bring your gas stove, bring your electric stove, and we'll trade it for a gas stove. Okay, this is actually something that should actually be looking at doing as well. Now, why is this an important conversation? Why is this an important spending measure? Because it's actually 4 times more effective to just give people gas stoves than it is to actually build a power station. It's actually 4 times more effective to actually just tell someone, look, bring your electric stove, we'll give you a free gas stove. Okay, and they, like I said, these were policies that they did in South Africa, and they actually implement. Now, obviously, these are things that were slowed down. They stopped doing this a while back, but these are actually things. Even in Botswana, they did it as well. They actually stopped. They stopped they told people, bring your electric stove. We'll give you a free gas stove and a free cylinder and a free refill. That's what they did for these people, because they did the math and they realized building a power station for all the growing number of houses who are using electric stoves was going to be difficult. So why don't we just buy a bunch of gas stoves and give it to these people so that they can get their cooking off the grid? Okay, so this is something that we can start to look at as a country, and you'll find that it's actually more cost effective to give people gas stoves than it is to actually give them than it is to even build a new power station. Because you have to remember, you're connecting 50,000 new households. 50,000 new households connecting to the grid every single year is equivalent to a 40 megawatt power station. Okay, that's 40 megawatts of new demand coming onto the grid every single year. Okay, and that is not easy for the government to raise the capital, especially in this period where they're constrained. It's very difficult for them. And finally, one of the things we're looking at here is a five-way mining tax allocation. One of the things we actually been looking at, but I'll talk about this at another time. I will talk about this more. I also have proposed that we should be looking at a gold savers market where the local gold mine should actually be held in the Bank of Zambia, and local savers should be able to access it, be it pension funds, individuals, institutions, unit trusts. We should be able to access saving in gold so that we can diversify away from just our domestic market and have our own disaster hedge. This creates more gold retention. It incentivizes a lot more processing. So this is a spending measure that would actually help. So if we can create a monthly gold auction, the same way we have bond auctions and T-bill auctions, if we can have gold auctions where individuals can buy a certificate or securitized gold that is held in the Bank of Zambia, adding to the reserves of the nation while simultaneously having the savers of the country being able to actually diversify their holdings, that would be a way to do it. And finally, CDF allocations. This is the final one I've actually put out there, is allocate 10% of CDF funds for training in finance and business, because we actually have got poor business skills and poor money management skills in this country. And also allow CDF committees to convert empowerment funds. So 10% of CDF, not the full CDF, 10% of CDF empowerment funds. Sorry about that. But also allow them to convert the empowerment fund component into a seed capital fund, where they can actually work with a SEC regulated advisor to also be able to run this fund like a proper fund based on a constituency development fund, so that we're not just handing money out to people who are not going to be able to use it to grow. We're actually giving money correctly for the purpose of business growth. Okay, that is the key factor we're looking at. Those are some of the budget proposals that I put down for you. I've also looked at some of the questions people have put out here, and we've actually seen Mwamba Tarek Chiganda said 2024 budget should broaden the tax into informal sector and less overly taxing of the formal sector payee. Personal growth will be faster. That is that they are working on that, probably with the electronic tax systems. They have been trying to work on that. So they do need to invest in ZRA to do that. ZRA needs to be able to have much better tax. Right now, they've actually improved heavily, by the way. But it's just going to take some time. Even NAPSA is still, majority of NAPSA contributions are coming from the formal sector. Now, out of the 965,000 NAPSA contributions, only 15,000 of them are coming from the informal sector. So thank you for everybody who has joined us. Yes, and I think one of the statements here by Eugene Swaniso said it would be a good progressive idea for local bondholders to be tax exempt. As I've said, should either be tax exempt or we should bring it down to turnover tax levels for anybody who earns coupons less than 800,000. If you're holding bonds less than 800,000 a year, you should be paying the 4% tax. Individual investors, if you're holding less than 8 million worth of face value bonds, max 6. If you're holding less than that, then you should be paying the 4%. You should be paying 4% tax instead, if we're going to match it, so that it's fair with housing. So that has been our breakdown of the conversation. Thank you very much for everybody who's joined us. It's a question I will pose out to everybody. Please have a wonderful and blessed day. All the best. Thank you for being with us.